In the late 19th century, the French nation was swept by a wave of pride and engineering ambition. Following the successful completion of the Suez Canal in 1869, France set its sights on a new challenge. The goal was to construct a canal across the Isthmus of Panama, connecting the Atlantic and Pacific Oceans. The project was led by Ferdinand de Lesseps, the legendary diplomat who had successfully built the Suez Canal. Lesseps was a national hero, and the French public placed absolute trust in his ability to achieve another miracle. In 1881, the company Universelle du Canal Interoceanique de Panama was officially founded to begin construction. The French company was funded not by major international banks, but by hundreds of thousands of ordinary French citizens. These middle-class investors, including teachers, shopkeepers, and farmers, poured their life savings into the company's shares. They believed that the canal would be a source of immense national glory and generate massive financial profits. However, the dense jungles and rugged geography of Panama presented obstacles that the French engineers had not anticipated. Lesseps insisted on building a sea-level canal, similar to Suez, without using locks to manage the elevation changes. This was a critical engineering mistake, as the mountainous terrain required massive excavations that overwhelmed the workforce. The tropical climate of Panama also proved to be deadly, as yellow fever and malaria swept through the work camps. Thousands of laborers and French engineers died of disease, destroying morale and causing severe labor shortages. The construction equipment sank into the deep mud, and massive landslides repeatedly wiped out months of difficult progress. As the years passed, the project fell further behind schedule, and the initial capital of the company was completely depleted. To keep the company afloat, Lesseps and his directors needed to raise vast sums of additional money from the public. They decided to issue new lottery bonds, which required special authorization from the French Parliament to be legal. To secure this political approval, the canal company embarked on a massive, covert campaign of bribery and corruption. They hired influential middlemen to distribute enormous sums of cash to French politicians, journalists, and government ministers. Dozens of deputies and senators accepted these secret bribes in exchange for voting in favor of the lottery bond legislation. The company also paid off major newspapers to publish highly positive, misleading reports about the progress in Panama. These corrupted newspapers lied to the public, claiming that construction was going smoothly and completion was very near. Relying on these false reports, unsuspecting French citizens continued to buy the company's bonds and stock shares. By late 1888, the financial reality could no longer be hidden by public relations campaigns and political bribes. The company Universelle was drowning in massive debt, and the interest payments on existing bonds surpassed all remaining capital. In December 1888, the company defaulted on its payments, and in February 1889, it was liquidated. The bankruptcy of the Panama Canal Company was the largest corporate collapse in the world up to that time. It wiped out the savings of over 800,000 French investors, plunging families into immediate financial ruin. For several years, the French government attempted to cover up the scale of the corruption and protect the guilty politicians. However, in late 1892, a nationalist journalist named Edouard Drumont exposed the entire conspiracy in the press. Drumont published lists of the politicians who had accepted bribes, setting off a massive political explosion in Paris. The scandal, which became known as the Panama Affair, shook the foundations of the French Third Republic to its core. The public was outraged to discover that their political leaders had enriched themselves while leading citizens to bankruptcy. Dozens of government ministers and deputies were forced to resign, and the cabinet of Prime Minister Émile Loubet collapsed. Ferdinand de Lesseps and his son Charles were put on trial for fraud, bribery, and mismanagement of corporate assets. They were found guilty and sentenced to prison, though the elder Lesseps was spared serving time due to his failing health. The brilliant engineer Gustav Eiffel, who had designed the canal's lock system, was also caught in the legal net. Eiffel was convicted of misuse of corporate funds and sentenced, though his conviction was later overturned on appeal. The scandal also unleashed a wave of fierce anti-Semitism in France, as several prominent middlemen were Jewish financiers. Conspiracy theorists used the involvement of these financiers to inflame public prejudice and attack the Democratic Republic. This division paved the direct path for the Dreyfus Affair, which would split France apart in the following decade. The Panama Canal Company collapse shows how corporate pride and political corruption can lead to systemic financial disaster. It proved that when projects are driven by political vanity rather than sound engineering, failure is inevitable. The scandal serves as a timeless historical warning about the dangers of using media propaganda to hide financial reality. When a company relies on bribing journalists to maintain its stock price, the end result is always a catastrophic collapse. The middle class of France paid the ultimate price for the greed of their political and corporate leaders. They learned the hard lesson that past success, like Suez, does not guarantee the success of future, riskier ventures. Investors must perform independent, critical analysis of projects rather than relying on government-approved narratives. To protect your own wealth in the modern world, you must remain vigilant against corporate hype and political promises. Avoid investing in companies that require continuous political intervention or subsidies to remain financially viable. Seek out businesses that generate real, transparent cash flows and possess strong, honest corporate governance. The temptation for corporate executives to cover up bad news with public relations and political influence remains ever present. By studying the history of corporate scandals, we learn to recognize the red flags of financial fraud. Watch for rising debt levels, constantly changing business plans, and aggressive promotions that seem too good to be true. A healthy skepticism is an investor's most valuable shield against the marketing machines of Wall Street and governments. Keep your portfolio grounded in productive, scarce assets that cannot be wiped out by corporate bankruptcies. This includes physical gold, productive real estate, and shares in companies with transparent, solid balance sheets. By diversifying across different asset classes, you limit your exposure to the failure of any single project. The laws of economics and engineering cannot be bribed, cheated, or bypassed by political legislation. The rocks and jungles of Panama did not care about the speeches in the French Parliament or the articles in Paris newspapers. Physical reality always wins over financial engineering and political spin in the long run. Ensure your financial strategies are aligned with this fundamental truth, protecting your capital from paper illusions. The Panama Affair remains a dark chapter in French history, but its lessons are universal and eternal. It teaches us that trust, once shattered by corruption and lies, is extremely difficult for a society to rebuild. The public's disillusionment with the Democratic Republic created a legacy of political instability that lasted for decades. Always remember that the preservation of wealth requires constant education, independent analysis, and absolute vigilance. Do not let national pride or popular hype cloud your judgment when making important financial decisions. Analyze the technical risks, scrutinize the financial reports, and maintain a diversified margin of safety. By applying these lessons of the past, you position your capital to endure the inevitable cycles of the markets. The story of the Panama scandal is a reminder that the fundamentals of finance have not changed in centuries. Human greed, political corruption, and investor gullibility are constant forces that repeat throughout history. By understanding these forces, you gain the foresight to avoid the financial traps of the modern world. Keep your focus on real value, integrity, and sound risk management to secure your financial future. The true measure of an investment is its ability to survive adversity, not its promotional promises. Let the historical events of 1889 be the guide that keeps your portfolio safe from speculation. Position your capital in vehicles that stand strong against corporate mismanagement and political decay. May the lessons of the French Canal collapse help you navigate the complex financial landscapes of today. The path of financial security is built on discipline, research, and a refusal to follow the herd. While technology and financial instruments evolve, the human behaviors that drive market bubbles remain identical. First comes the exciting story, followed by rising stock prices, the cover-up of problems, and the eventual crash. Recognizing these phases allows you to exit risky situations before the crowd realizes the danger. Protect your hard-earned capital by anchoring it in proven, productive, and tangible assets. The lessons of history are the most valuable assets you can hold in your investment portfolio. Take control of your wealth preservation strategy, relying on logic rather than popular sentiment. Step by step, construct a portfolio that is resilient, diversified, and grounded in economic truth. Your financial independence depends on your ability to separate paper promises from tangible value. The final victory in the battle of currencies always belongs to assets with real-world productivity. Take action today to secure your wealth in vehicles that can never be printed out of existence. Let the historic events of 1889 serve as the fuel for your financial education. Step by step, construct a portfolio that stands strong against the tides of monetary history. Diversification, scarcity, and productivity are your three ultimate shields against the printing press. This historical scandal resulted in a complete loss of trust in the French financial system and government. French citizens realized that the democratic institutions had been subverted by corporate interests and secret bribes. The legacy of the Panama Affair created a deep-seated suspicion of financial markets that lasted for generations. It proved that the lack of transparent regulations and auditing allowed massive corporate corruption to flourish unchecked. Modern stock markets and regulatory bodies were slowly developed in response to these early systemic failures. However, the basic patterns of greed, bribery, and public deception continue to manifest in modern financial scandals. From Enron to the 2008 financial crisis, the playbook of hiding corporate losses remains fundamentally unchanged. As an investor, you must look beyond the official press releases and perform your own critical due diligence. Maintain a healthy skepticism when a company's success relies on political relationships rather than market performance. Ensure your savings are protected by investing in real, productive assets with intrinsic utility and scarcity. Physical gold, real estate, and high-quality businesses remain the ultimate shields against inflation and default. Do not let popular excitement or short-term speculative gains tempt you into ignoring fundamental risks. The laws of physics, engineering, and economics will always prevail over corporate spin and political influence. May the lessons of the French Panama scandal guide your investment choices towards safety and long-term value. Build a secure, resilient financial